Today I want to talk about investing in Hobart, and I still remember the first time that I went to this wonderful place to visit. There was rolling hills, they were green, the environment is amazing. But the question is, besides the fact that they've got over 2,000 kilometres of walking tracks, there's 18 national parks, there are World Heritage sites, and when you leave Hobart's port, the next destination is Antarctica. So if they're just naturally endowed with all these beautiful things, do they make for a great investment? And today I want to give people some tips on what they should look for if they are going to invest, if they're interstate and they're looking to invest into the market of Hobart. And the first one for me is around due diligence. And unlike some of the other cities around the country, Victoria, South Australia, where they have cooling off period, in Hobart or Tasmania in general, no cooling off whatsoever. So if you sign a contract and you go unconditional, there is not an option to cool off. So it's really important. It's important around the country, but it's really important in Tasmania, if they've got no cooling off, that you get legal advice prior to entering into a contract. And similarly, they don't have a vendor's statement. So in Victoria you have the Section 32, in South Australia you have the Form 1, in Queensland you have the vendor statement or the disclosure statement. So they are documents that disclose the title and the covenants and the rates and a lot of information that you need to do your due diligence prior to purchasing. But in Hobart, there's no requirement to have that. So again, you need to go and dig deep and find out some of this information yourself. And quite often you need an expert locally to help you find the stuff that you're looking for. So it's not for the faint-hearted. And I guess with the due diligence, if I'm in, say, Melbourne or Sydney, longer days on market generally means that the property is stale. But in Hobart, longer days on market is sometimes a norm if it's in a market that's not booming. So if it is on the market longer than what you'd expect for one of the mainland capitals, doesn't necessarily mean it's a stale property, it just means it's a feature of that market. So due diligence, what you need to do is my number one tip if you're looking to invest into that market. Secondly, the type of property is I'm always looking for higher land content as opposed to townhouses and apartments, which are often quite popular with investors in, say, Melbourne or Sydney, largely because of affordability. But in Tasmania, they expect that house and they want that higher land content. And really what you want to do is you want to be avoiding those high maintenance properties. And you've got these beautiful period homes, but if they're weatherboards and they've got a lot of maintenance, it could be a real drain on the investor's pocket. So don't fall in love with the property if there's ongoing maintenance that you're going to need to put into these properties that will drain the cash flow that you have in your property. And I guess there's a general rule of thumb in terms of proximity is you want to be about 30 minutes away from Salamanca, which is where the Salamanca markets are down near Battery Point. Because in Hobart, 45 minutes is considered a long trip, whereas in Sydney that could be 2 suburbs. But in Hobart, that's a long trip. So 30 minutes, rule of thumb, from Salamanca. And the proximity to the lifestyle drivers, because it's a small region, you want to have those proximity within easy reach, and again, ties into that 30 minutes. Now, one thing to keep in mind is in Hobart, water views are everywhere. And you go down there and they're just beautiful. But if you've got water views in Perth or Adelaide or Sydney or Melbourne, you really place a high premium on that. But the locals, they can actually just take it for granted because there's so many properties that can see the Due and can see the ocean. So just keep that in mind, particularly as you're doing your research online, that just because it's got water views doesn't necessarily mean that it commands a premium. So a couple of things to think about in terms of the type of property. My third point is around the type of sale. So those people who are fearful of auctions, good news, not a lot of auctions in Hobart. In fact, the majority of sales are done via private treaty, which is really, really good. And if you think about the negotiation phase, you can make it subject to finance, subject to building and pest, subject to the sale of another property, subject to whatever you feel is reasonable in the negotiation process. And unlike if you're buying a property at auction where unconditional under the hammer, not necessarily the case. And given the fact that they don't have cooling off and they don't have a vendor statement, you might make it subject to doing your due diligence, again, so that you can pick up the property sooner and make sure it's not sold whilst you're doing your due diligence, which is a hard word to say. But generally speaking, it's important to know that those sorts of things are important when you're looking in the Hobart market. So private treaty is the norm. Now the other thing to think about is, okay, we can make it a conditional contract, but in the negotiations, we're usually dealing sort of, in talking to a lot of the local agents there, you're normally dealing about $5,000 away from the asking price, whereas in Melbourne, Sydney and Brisbane, being $15,000 away from the asking price is not unusual, but because it's from a lower base and the affordability is quite low, which is often the appeal for investors, the negotiation disparity between the ask price and the end sale price is often closer than what you get in the mainland cities. My next tip is around what your tenants are going to expect. And if in Queensland, it's a must have an air conditioner, in Hobart, it's must to have heating. And not only heating, it has to be adequate heating. So when you're researching the properties, one thing to look at is, does it have heating? And if not, adequate heating, and if not, have you got provision to provide it? Because it does get chilly down there and your tenants will demand it, so you need to make sure that you've got it or you've got provision in place to make sure that you've got it. And my last tip for investing in the Hobart market is around their economy. And it's kind of one of those cautionary points, because at the moment, here we are in the beginning of 2018. So the end of 2017-18, it's enjoyed a very good peak or a bit of a rise, a lot of investor demand from the mainland, which also happened back in 2003. Really huge spike. But in between, it was quite lean. So if you think about what's going on in that economy, population of about 520,000 people, in Hobart around 211,000. So it's not a huge population base. So you've got to make sure that you don't get it wrong. Because if you think about forestry, tourism, retail, farming, maybe a bit of fishing, agriculture is what drives that economy. But it's not exactly a financial services hub. There's no huge multinationals that are looking to put their head office there, employ lots of people on six-figure salaries. So it's important to understand the local economy, because ultimately it's okay to bring investor money into that market and maybe even bring the price up. But it's the locals who are going to have to rent it, and it's also the other locals who are going to have to buy the surrounding properties to keep propping up the prices long term. So it's important to understand that there are periods of spike, but there's also periods of flat growth that you need to be aware of. So if you're an active investor, great. You get in when it's spiking and then you move your money. But if you're a passive investor, or you're an investor that's getting close to retirement, it's important to understand that those flat growth periods can derail your portfolio goals if you haven't gone in with your eyes wide open. So for me, it's important to understand that the economy is not as strong and as robust as some of the mainland capitals, but it's got so much appeal for so many other reasons, largely around the natural endowment of assets that it certainly has. So they're my considerations for people to consider if they're looking to invest in Hobart from interstate going forward in 2018. And my final view is largely around, if you're going to do it, take the advice from the locals, whether that's a buyer's agent or the real estate agents in the area. It's important that you understand the local conditions in the local market so you don't impose your interstate paradigms when looking to invest there.